Seritage Growth Properties is the real estate investment trust that emerged from the bankruptcy of Sears. It's now exploring strategic alternatives, including potential deals with partners, investors, or buyers. And joining us to discuss the path ahead is Andrea Olshan, CEO and president of the company. Also with us is Bloomberg's deals reporter, Ed Hammond, which is appropriate, Andrea, because you may be, you're in the market, I guess, for a deal of some sort. What's your preferred exit here?
Listen, I think this is a tremendous portfolio, and there are so many different ways that this could go. We really need to look at alternatives and maximize value. Right now, where we're trading versus even the value of some of our prime assets, there's such a dislocation that it's really incumbent upon us to look at what alternatives
Because property values have just skyrocketed, what do you think your portfolio is worth?
So we haven't been public about it. I think a large part of our portfolio is also its potential. So, we were all Sears and Kmart's, and then what it became was a retail portfolio that still has incredible value-add opportunities. We have 30 assets that are going to be multifamily developments. We have millions of square feet of entitlements for tech, office, and life sciences. So you're really looking at a forward valuation of what this portfolio could be.
Now, Andrea, obviously you announced the decision to go with this process or to explore these options a week ago, and in sort of normal deal land, that means everything is up for sale. Who have you attracted so far? What kind of parties are you talking to, and what kind of interest are you seeing?
It's a great question. So really, because the portfolio is so diverse, we're seeing people both look at an overall, looking at the platform, because we do have an incredible development platform, and we're able to repurpose outmoded real estate, which obviously, as we all know, there's so much of it throughout the U.S. But also people like the different portfolios, because we have sub-portfolios. So, we're seeing interest from retail operators, from life science developers, from logistics companies. So we're seeing it across the gamut.
And obviously, Edward Lampert was the chairman of the company. He stepped down, presumably because he himself may be interested in buying this. He doesn't seem to be able to stay away from anything connected to Sears for long. What conversations have you had with him at this point around the sale?
So Eddie has always believed in the deep value of the company, and when I interviewed with him a year ago, that was something that was very, very clear. He continues to be supportive, and as he said in his 13D, he's looking to maximize shareholder value, and that's what we're all looking to do.
I'd love to get your take on Matt Winkler, our editor-in-chief emeritus, wrote an opinion piece pointing out that even though consumers right now seem deep in the dumps with regards to an outlook, inflation is scaring them, et cetera, corporate America is so optimistic. They want to hire more than they ever have before. They want to spend. CapEx projections are so high. When you have discussions with possible partners or even buyers, do you get the same sense?
Yeah, it's interesting. It depends on what type of real estate it is. So when you look at our...
But Target, for example, has come out with incredibly positive, and they're in the same ballpark as you.
They're so our retail leasing this year has been off the charts. We have been approached. Target is one of the tenants that we speak to. They want to be larger formats. They want to be all over the country. They're looking to own their real estate. Also, all of the fast casual restaurants, even sort of like tale of two cities. And I think if you look at things like the multifamily portfolio that we're entitling right now, that is tremendous interest. And we were talking earlier about how so many of our properties are transit oriented, which really was discounted a few years ago. And now with rising gas prices, people are really excited about being near public transportation and in a mixed-use community where they can work and live in the same environment.
Well, I wanted to ask about that, Andrea, because obviously this should be a moment when everyone is returning to the office or supposed to be returning to the office
in San Diego. There's a flight to quality. We just signed 2 major medical office uses in Aventura, Florida. Again, it's in the prime locations. They realize there's an incredible scarcity, and they want to be in the right location. And I think it's also to bring people back to the office. The environment is department stores that have gone out of business. Our average location is over 13 acres. And because we had the auto center and the garden center and all these other components to Sears, we interplay with the mall owner. Well, when you have 13 acres, you have enough scale to really build a sense of place regardless of what happens with the rest of the mall.